Well, hi there and welcome to the ISC FX Options Weekly Outlook for September 5th, 2011. As always, this is Jason Ayers of OptionSource.net. Let's take a look at a weekly chart of the U.S. dollar index. This is a great way to gain perspective as to how the U.S. dollar has been trading against the basket of currencies. Well, the dollar index has broken above the 74.75 support zone, suggesting U.S. dollar strength to the upside. Although we may see consolidation within the 74 and 75.5 range this week, the window is open for a push towards 77. Let's take a quick look at a daily snapshot of the U.S. dollar index. This daily chart reflects the resistance level at 75 and the near-term upside target sitting at 76. Next up, the U.S. dollar versus the Canadian dollar as seen here in the ISC FX Options pair value CDD. The CDD appears to be forming a bull flag as it breaks back through this 98.99 resistance zone. Now, a break and close above 99 should confirm a continuation higher. However, rejection at 98 suggests a possible retracement down to the support level sitting at 96.97. Let's take a look at the YUK, the U.S. versus the Japanese yen. Well, as with last week, the YUK continues to consolidate along the lower end of the 76.5, 77 support zone. Now, a break below 76.5 is likely to signal a continuation to the downside. A break above 77 should yield a move towards 78. Let's take a look at the U.S. dollar versus the euro as seen here in the ISC FX Options pair value EUI. Well, the EUI is testing the upper range of the resistance level sitting at 70.71, and a break above this level is likely to yield a bigger picture continuation higher. Rejection at 70 is likely to retrace back down to test support within that 68-69 focal zone. Next up, the BPX, the U.S. versus the British pound. The BPX hit 62 last week. Rejection at this resistance level is likely to yield a retracement back down to the 60.5, 61 support. However, a break above 62 should signal the continuation of the uptrend. Next up, the AUX, the U.S. versus the Australian dollar. Well, the AUX broke below the 94.95 support zone last week, suggesting a continuation of the current downtrend. Now, a move back up beyond the 94.95 zone this week opens the window for a reversal and subsequent test of this 96.97 focal zone. Let's take a look at a few of our key points. First of all, the U.S. dollar index broke above 75 last week, lending credibility to a continuation higher. While we may see a pullback after such a significant move higher, pending any unforeseen global event, the trend appears to be to the upside. The CDD has formed what appears to be a bullish flag and is in the process of breaking higher. However, we are cautious of resistance at the 100 level. The YUK continue to consolidate along the lows. As with last week, we are looking for a break back above 77 to signal a tradable opportunity to the upside. The EUI remains range-bound but staged a reversal off of the lows last week and headed towards a test of resistance at 70.71. A break above this focal zone should signal a continuation to the upside. The BPX traded back up into the 61.5, 62 resistance level after pulling back early last week. A break above 62 opens the window for a continuation higher. The AUX continued to slide lower. A break back into the 94.95 zone opens the window for a retracement higher. A reversal at break below 93 confirms a continuation lower. And this has been your ISC FX Options Weekly Outlook for September 5th, 2011. As always, this is Jason Ayers of OptionSource.net reminding you to sign up for your free webinar at www.optionsource.net. Thanks for joining me here this week. We'll see you here next week.